Would I invest in commercial real estate in the retail sector today? Short answer is yes, depending upon the property. It's always, it depends, right? So retail is a broad category. You can have a single tenant building with a Kodak photo booth all the way, remember those, all the way up to a mall and anything in between. Single tenants with Taco Bell's, Kentucky Fried Chickens, Carl's Jr., McDonald's, all the way through CVS's and Walgreens to strip shopping centers with nail salons and barbers and all that kind of fun stuff, to a grocery drug anchored center, then all the way up to power centers and TJ Maxx's, and then you get the malls with Nordstrom's, JCPenney, Sears, all that. So somewhere in there, there's always an opportunity. And for me going forward, you know, you're reading about doom and gloom, the death of retail. For me going forward, it's going to be the ability to have a consistent flow of tenants. So if I have a specialized restaurant building, once that tenant leaves, I probably have to spend a lot of money to go get that next restaurant tenant in there or to do something else with it. So unless that is a corporate guaranteed restaurant that I know has a massive balance sheet and is good for 20 years, I'm probably not that investor. Strip retail centers, one way to look at those today, in something probably haven't discussed before, is a covered land play. If I'm getting income today and somewhere 5, 10, 15 years from now, this makes a better multifamily site or an industrial distribution site or an apartment complex or whatever it, you know, it should be, I'm getting cash flow while I'm waiting for that land to appreciate to be a better asset. So it doesn't mean you have to buy retail for retail's sake. The other component to buying retail you want to make sure is one, is it internet proof? Two, is it COVID proof? That's a new one, which I think will go away, but for now, that's something. And at the end of the day, is there going to be tenants that will be able to step back in when someone else gets there? And you can usually see the life cycle of a center. So imagine a 30,000 square foot strip retail center. You've got, name any big tenant that you're aware of, Ulta and Victoria's Secret and TJ Maxx and all that. Well, when they roll out and don't renew, the next tenant in is the Army Navy surplus store, the Goodwill, the coin operated laundromat. And then after that, it's scrape and build something else. So you can see the life cycle of these centers, and sometimes they gentrify and move back up, but based on the tenants that are in place, you can see where you are in that life cycle of the center and can step in at any given time. If you're comfortable with the risk, you buy it down low and turn it into something else. But for me, it's a viable investment class. Retail is not dead. It's not going away. In fact, in Orange County, our vacancy factor is 5% right now. You'd think it'd be so much higher than that. Yes, there's increasing bankruptcies, but we've seen this before. Retail is always morphing. So to me, I would invest in it if it's an opportunity that I will be able to add value to and then hold on to because it's in a good location. It's surrounded by consumers. I can replace the tenants relatively easy, and I can capitalize on it by either refinancing it or reselling it somewhere down the road eventually, or even owning forever.